Want to grow your money without checking the stock market every day? These 3 ETFs are like wealth-building machines. They're simple, powerful, and perfect for anyone who wants to invest the smart way with no stress. And stick around, one of them has outperformed the S&P 500 for over a decade. In this video, we're breaking down the top 3 ETFs to buy and hold forever. These aren't hype picks. These are solid, proven funds that give you exposure to the biggest companies, the hottest growth sectors, and even steady dividend income. Whether you're brand new to investing or you've got a growing portfolio, these picks are built for long-term success. Let's get into it. First, what exactly is an ETF? ETF stands for Exchange Traded Fund. Imagine a basket that holds a bunch of stocks. When you buy an ETF, you're buying a piece of that whole basket. It gives you instant diversification without needing to pick individual stocks. Why ETFs are great. They're low cost, easy to invest in, and they typically track major indexes like the S&P 500 or the Nasdaq. You can hold them for decades, reinvest dividends, and build wealth over time without needing to be a stock market genius. ETF number 1, VIEW, the Vanguard S&P 500 ETF. VO tracks the S&P 500, which means you're investing in 500 of the biggest, most successful companies in the U.S., like Apple, Microsoft, Amazon, and Google. It has an extremely low expense ratio of 0.03%, which means more of your money stays invested and compounds. Over the long term, the S&P 500 has returned around 10% annually. That's the power of owning a piece of America's top companies. If you want one fund to rule them all, VOO is it. It's safe, diversified, and proven. ETF number 2, QQQ, the Invesco Nasdaq-100 ETF. This ETF gives you exposure to 100 of the biggest non-financial companies listed on the Nasdaq. That means big names like Nvidia, Meta, Amazon, Apple, and Tesla. QQQ is tech-heavy, which means higher growth potential, especially in boom years, but also a bit more volatility. Over the past 10 years, QQQ has often outperformed the S&P 500, thanks to the explosive growth in tech. The expense ratio is a bit higher, around 0.2%, but many investors are willing to pay that for the upside. If you're comfortable with a little more risk for bigger gains, QQQ belongs in your portfolio. ETF number 3, SCHD, the Schwab U.S. Dividend Equity ETF. SCHD is built for investors who want dividends plus solid long-term growth. It holds high-quality dividend-paying companies like Coca-Cola, Verizon, PepsiCo, and Home Depot. This fund focuses on companies with a strong track record of growing their dividends, which means you get steady income and long-term capital appreciation. It's perfect for a more conservative or balanced approach, especially if you want your money to generate cash flow along the way. SCHD's yield typically ranges from 3 to 4%, and it's known for performing well even during market downturns. So how do you actually invest in these ETFs? Open a brokerage account with Vanguard, Fidelity, Schwab, or Robinhood. Search for the ticker, VOO, QQQ, or SCHD, and hit buy. You don't need thousands of dollars. You can start small and use fractional shares. Use a strategy called dollar cost averaging. Invest a set amount every week or month, no matter what the market is doing, and be sure to reinvest your dividends. This compounds your growth even faster. Here's the real secret. Buy, hold, repeat. These ETFs are not for trading, they're for long-term wealth building. Hold them for 5, 10, even 30 years. Let compound interest do the work. Don't panic during downturns. The market always recovers, and these ETFs are built to bounce back stronger. Even during recessions, the companies inside VOO, QQQ, and SCHD continue innovating, growing, and paying dividends. So let's recap. VOO is your go-to for total market stability. QQQ gives you high-growth tech exposure. SCHD provides income and long-term value. Pick the one that fits your goals or combine them for a powerful, diversified portfolio. If you found this video helpful, smash that like button, hit subscribe, and drop a comment with your favorite ETF. Remember, Consistency builds wealth. Keep investing, stay patient, and watch your future grow.